I'll quickly shuffle through the last company on the list, then, Steve, because I'm realising we are running slightly out of time. This is VAT Group. They're a Swiss company. We have talked about them a couple of times before. They're essentially a leader in vacuum valve solutions, which are critical components when you want to open a semiconductor manufacturing plant and other high-tech industries like solar panel manufacture. Anywhere you need dustless environments, a vacuum valve is very, very important. Flat panel displays, solar panels, advanced semiconductor chips. Anybody who is doing precise, sort of super reliable equipment, their VAT plays a vital role in enabling the production of these things. So yes, another one of those very interesting businesses hidden in Europe somewhere. Very important businesses that nobody's ever heard of, and in the UK we sort of shun because it's got VAT in the name. And for the Americans listening, that's a tax over here. Sales were really strong. So these are on the half. So sales was up about 24% year over year if you take the half, to 337 million Swiss francs. About a 30% EBITDA margin as well. That was up about 22% year over year. They generated about 51 million in free cash flow. That's again in Swiss francs. That was up about 93% year over year. And just to sort of compare, it's about 8.5 billion Swiss francs company. So it's not a massive company in any stretch of the imagination. About 7% of sales went into R&D, Steve. They've always put quite a chunk into R&D. They want to stay ahead, and they so far have managed to stay ahead. Order intake was a little bit spotty. Orders were down 3%, which they kind of said was a little bit of growth just being slightly pushed back. 61 spec wins in half one, and about 80% of these spec wins were in semiconductors and global service as well. So the actual sales for valves and semiconductor was up about 26%, and global sales, which has been one of their bigger growth areas, grew quickly as well. So lots of sales going into China, Steve, depending on how you feel about that. Pretty direct China exposure with this company, as China seeks to be somewhat kind of self-sufficient. That has led to them approaching VAT Group for help, really, in this area. But yeah, I thought this is a decent report, Steve. I thought was good. So I was shocked to see that it's down nearly 15% on the week. Net income was up. If you cut out the FX challenges, you can improve most of those numbers by nearly 6 or 7%. So it was pretty pretty hurt by FTSE, and not really a lot they can do about that. One of the things that they did point out, two of the things, is they reaffirmed guidance. They're expecting growth in sales, growth in EBITDA, growth in margins, growth in free cash flow, and they think that order momentum is going to improve by Q4. They call it book to bill to normalise, because they have been going through a slower period. But they did say that they aim to outgrow the semiconductor wafer fabrication equipment market by around 2 times. Which is also expected to outgrow global GDP by a similar margin. And they said that this is an ambitious target, but it's based on their strong position in the valve market, particularly with the semiconductor industry, and their ability to leverage both its technology leadership and its global footprint. And I'm inclined to believe them, Steve, because only a week or so ago we were looking at TSMC's earnings, and what they were putting forward was this huge build-out of semiconductor fabrication plants to happen, well, all around the world. And TSMC don't build second-rate fabs, and they will turn to the best company in the industry when they need the clean rooms, vacuum valves, what have you, and they will turn to VAT Group, I would suspect. So I think this is just a case of kind of what ASML was saying, Steve. I think it follows ASML pretty nicely, this report. It's not that it's not coming, it's just not here yet. And I think that's kind of what the market didn't like on otherwise, Steve. a pretty good report, I thought.
Reminded me of ASML for another reason, actually, as well, which I'll come back to in a moment. But I was looking at VAT Group, and my initial thing I tried to remember was what VAT, in this context, stands for. And it does not, believe it or not, which I thought it must be, surely, stand for valves and things. No. Steve, do you know what it does stand for?
Isn't it a horrendously long word?
Yes, it is. It is Vakuumventile. I don't know what language it's in, actually, to be honest. It might be German. But it's like, yeah, it's like vacuum with a K and then ventile afterwards. AG, which is disappointing. I think they should change that name to valves and things. But we'll get on to some more kind of prosaic matters here. How do I feel about China? I feel pretty good about them selling stuff into China. Not necessarily for this company particularly, but I'm fed up of reading about China's slowdowns on everything that I own, basically. So China's drive towards self-sufficiency, and this is, I'm thinking of particularly in the industrial space at the moment. I'm not talking about Diageo, or I don't own Burberry, but stuff like that for the time being, and slow sales from LVMH in China. I'm thinking industrial things, and time for China to reindustrialize and get moving, because this is a kind of interesting position supply chain type thing for lots of kind of precision manufacturing that has been fairly weak lately. That semiconductor market has been horrible, and when you look at their kind of results, it kind of initially looks like they make no sense. But when you look at sort of semiconductor segments, or a 3% drop in orders and a 35% increase in sales, my initial response to this, and it may be worth just spending a moment on this for anyone who's trying to follow this company. I'm sure you already know it, but if you don't, I wondered how the bollocks this was possible. A 3% drop in orders and a 35% increase in sales. I thought, what are they doing? They tripled the price of everything. No. It's because they're working down a backlog, basically, and there's a difference between when you fulfill your orders and count them as sales and when you get them and count them as orders. So the stuff coming in is slightly lower. Which means that their book-to-bill ratio, I don't think you mentioned it exactly, Steve, but below one is kind of contraction, and I suspect it's pretty ugly. And this is the bit that reminded me of ASML, actually, not so very long ago. They're clearly working through a largish backlog here at VAT Group. And ASML, we remember, or I remember quite well, the market not really liking the fact that its backlog was now only, I don't know, whatever it was, 4 years or something, rather than 28,000 years worth of machines it could send out. But I remember thinking with you, well, okay, that means we've got however long it is to normalize things before we even start seeing it in the sales division. Not before we run out of cash or before we go bankrupt or anything like that, but before it even starts showing up in kind of top line sales. And my sense is something similar is true here of VAT Group, which is to say, well, things go through downturns, and it's better if they don't. It would be nice if demand was sort of solid all the time, and we were forever growing along at 22 and 24%, depending on whether you want the top line growth or the EBITDA growth. But that's not the way this industry works. And the way this industry works involves going through occasional downturns here. But if you've got a big backlog you can work through, that's effectively like kind of sticking your money aside to be aggressive when others are fearful and so on. So this is, I thought, pretty well fine in these cases here. So yeah, reasonably impressed with VAT Group. I like precision manufacturing things. They're a kind of business I think a lot about without thinking about them specifically, and maybe I should in this case, because precision manufacturing comes with some natural, very high moats. Things are difficult to make, difficult to replace, difficult to, as you point out, TSMC, difficult to convince anybody to buy anything else in this situation. So lots to like about that group, I think, and not a huge amount to worry about in what is maybe at first sight a confusing report in terms of the difference between sales and orders here, but generally good. More for the valves and things.
It's cyclical, Steve. That's what I tend to think about. So industrials tend to be cyclical, and semiconductor companies tend to be cyclical as well. I know we haven't really seen that with Nvidia, but they always were quite cyclical companies. So, but obviously, industrials are usually sort of they depend on how the economy is doing as well, and semiconductors often depend on a different kind of it. So you can have longer out cycles with that and longer in cycles, because they can be in when countries and companies are investing in things like R&D and all that, this, that, and the other. But I think this one ties in quite nicely with Judges because it kind of shows, clean rooms are a thing that would would help VAT and would also point to good Judges sales as well. And I think they tie in nicely together. That you can see that the two of these are sort of struggling for very similar reasons. But backlog is, like you say, Steve, they've got nearly a full quarter of work. Just over a full quarter of work at current run rates sat in the backlog. Now that did fall quite a bit year over year, but they're expecting growth, 2025 to be a growth year for them. So I'm not overly worried about that moving forward. So yeah, I am tempted to add to this one, Steve. This is one I do hold in my portfolio. In fact, it's I think we've talked about 3 stocks I hold in my portfolio today. One that I should have done, and I'd be I could be tempted to move this one along a percent or two if I could find some money. I think it's a very, very, very good company that's just sort of hidden away in Switzerland.
The thing with cyclicals is everyone knows that they go up for, it depends on what cycle you're looking at, but they go up for one reason and they go down for another reason, and not just kind of random fluctuations, but macroeconomic shifts. And this is why people get interested in macroeconomic forecasting and so on, because if you can see your way ahead in the cycle, if you can just be a bit further in front, it's a huge advantage here. And the difference, I think, between VAT and Judges that we've been talking about on today's show is that Judges kind of got caught by surprise a little bit. I mean, it's not their fault necessarily, but with VAT Group's kind of backlog and ability to just see far enough ahead, they can tell you what the next quarter's sales are going to be because they can build stuff they've already got orders for, and assuming those orders don't go away, which is not guaranteed, but it would take a bit to try and pull them out here, especially when there's more of a backlog. It does give you some better visibility through the cycle, and that's, if you're thinking about being an investor, if I was going to be an operator in a kind of cyclicals area, that's the kind of thing I would love to know about. I would love to be able to see ahead and think, I don't really care what happens in the next quarter. My order book is basically full here. After that, I'll be able to look ahead at the next quarter. You want to be looking that bit further ahead if you can. It's not always possible to see. It's never possible to see perfectly. But with a cyclical, the chance to be able to just see that bit further ahead is so valuable, I think, and that's why there's so much interest in VAT Group's backlog, I think, Steve. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.